Hey, what's up, everyone? This is Silver Slayer. Thanks for tuning in and welcome. I have put together a great video for you guys and gals today. It is so important to be subscribed to at least channels like mine that give you guys an update, the inside scoop on a day-to-day basis on what's happening in the economy, how this is affecting the price of gold and silver, and what you should do about it. You never want to blindly be investing into the market. You can't just not pay attention to all this stuff happening, not understand, how it's affecting the markets, and just invest. That's not how it works. If you want to, at least if you want to invest successfully or profitably. So make sure that you're subscribed to at least a channel like mine, because on a daily basis I give you guys at least 2 to 3 videos a day on what's happening, how this is affecting the markets, what the price of silver is going to be doing from this, or what it could be doing, and also how we can incorporate or adjust that into our strategy. So with that said, this video is pretty good. This video was written November 7th. Today's November 8th. I'm posting this video in the morning, but every day, and I'm only saying this so you guys understand, every day I give you guys the most recent article, right? Every article I cover on this channel is written the same day, if not the day before. So you're getting the newest information, the newest news on what's happening. No article was written longer than 2 days ago. Everything is up to date on daily. It's like watching your daily news channel in the morning. So gold investors might soon see a price of $2,500 per ounce. That's a nice number. I did some simple calculations, and if we see $2,500 gold, then the question is, what would silver be? Well, if we see a 40-to-1 ratio, which some say we should go back to, especially if things start to take off with silver industrially and gold and silver start to separate, 40-to-1 ratio would put silver at $60. A 50-to-1 ratio, obviously, silver would be $50. So we have some realistic numbers, and I say realistic because a lot of people say or try to say that $50 silver isn't realistic, but it very much is, especially because $50 silver was here not even 10 years ago. In 2011, silver was $50, and things are much more extreme, much more severe nowadays. So gold as well as GLD have had a fantastic time this year. The gold prices have been lingering near the $1,900 mark for a while due to high uncertainty around additional fiscal stimuli in the U.S. However, this situation is quite temporary. And I want to pause right here for a second. It's very temporary, but there's going to be some permanent consequences. There's going to be a lot of uncertainty, a lot of market instability, because there's a lot of unstable people, a lot of uncertain people. Now that we have a winner, things are going to start to float in one direction or another, since people have an idea on the direction the economy's headed. But there's still going to be a lot of chaos, a lot of volatility until things start to settle down. But the thing is, we don't just that's just focusing on an election perspective. We still have this global pandemic that's actually increasing more than ever. So due to the presidential elections, the pandemic, and other macroeconomic and political risks, gold prices should soar, thus pushing GLD prices to unseen before highs. And gold broke through that $2,000 mark with mere nothing compared to what's at stake now. Nothing. Gold solely broke through that $2,000 mark, the highest it's ever been in history, 5,000 years of gold, because of the pandemic. But now things are so much worse as we throw trillions and trillions into the economy, hurting the dollar even more, which we know is a direct link to higher gold and silver prices. So the SPDR Gold Trust EFT GLD price has been stuck at around $180 for a while now. Many investors might be thinking that the ETF's astonishing rally is already over, but I disagree with that. The main reason for this temporary halt is plenty of uncertainty around additional fiscal stimuli in the U.S. But in my view, the question of extra helicopter money is just a question of time. That's so true. So true. It's just time. Even more traction of gold ETFs and other safe havens will also be due to unprecedented political tensions. Here I'll explain my price targets for the yellow shiny metal and GLD. So let's jump into this. As you can see from the graph above, $10,000 invested in physical gold and GLD at the beginning of 2018 would have had a net worth around $15,000. Not too bad, right? Obviously, gold prices have a very strong correlation, so any change in the price of yellow metal should lead to a proportional change in GLD price, in my opinion. And I'm glad they said that in there, because a lot of times I do cover articles that are more on the ETF side of things, or they're essentially the same market. But sometimes it is good to get a wrap around or the inside scoop on both, and because they can play off each other. A lot of people might invest into both as well. So here's the cyclical nature of gold. Gold is quite a cyclical commodity. Its price rises when interest rates fall or stay depressed for a while. This can be seen from the diagram below. So, I mean, if that's not a direct correlation, I don't know what is. Now we are in a very favorable situation for the yellow shiny metal, since the low interest rates are near zero. So we know that precious metals are going to be bullish from this, right? This is like a proven fact. What is more, the Fed is planning to hold them near zero through 2022 to help the economy recover from the pandemic. So for the next couple of years, we're going to see zero to no interest rates. That is going to be fuel to the fire with trillions of dollar stimulus, growing demand with the falling supply. Things are going to get very bullish very soon. I doubt we're going to see $25 silver and $2,000 gold for too much longer. That's just my opinion, but it's definitely an educated guess with a lot of homework going behind that education, if you see what I'm saying. So that alone is bullish, right? The Fed will keep buying bonds, flooding the financial system with cheap money, and this alone is bullish for gold, right? That's just one of the many different factors for gold and silver. And when I say gold, I also mean silver. My name is Silver Slayer, not Gold Slayer. When I am talking about gold in this article, just replace the word with silver, but they both are very, very safe, intrinsic, profitable investments. By far, gold and silver are the best investments. However, that's not the only thing that matters here. It's also the pandemic, in which also plays a crucial role. It might look like many governments are still unwilling to impose another lockdown. After all, this spring, many countries took this measure to give local authorities and hospitals time to purchase the necessary medical equipment and drugs. However, it was recently announced that France and Germany implemented a 4-week lockdown. It is possible that European countries will follow their example. Moreover, some U.S. states might also have to take similar measures due to a surge in these pandemic cases. And actually, that makes sense, right? It definitely makes sense. The U.S. stimulus bill looks like a major hurdle for gold prices, but in my opinion, it will eventually get passed. After all, the U.S. economy has not fully recovered from the pandemic, whereas some more restrictions might follow soon. And that's depending, especially since we have someone in charge now who's going to definitely try to make sure that this pandemic doesn't get any worse, because his name is on the line now. He wants things to get better, so he might take more precaution. The size of this package is still unclear, but could probably be over $2 trillion. This money will not come out of nowhere, and that's what I keep saying. This money, where is this money coming from? This money has to come from somewhere. It's not coming out of thin air. There's going to be prices to be paid, right? There's going to be a consequence from this. There's going to be. The Fed will have to do more bond buying, thus devaluing the dollar. And this is exactly true. Look at my video I posted last night. McKinsey, $10 trillion in the economy to do a what did they call it, like a economy repair or something along those lines. And that's going to hurt the dollar globally, on a global scale. So this environment is highly bullish for gold and silver. What is more, there is election uncertainty, which is also an extremely bullish factor for safe havens. So, I mean, if you've been watching my videos over the last couple days or weeks, there's literally no argument here. You cannot argue me to say that precious metals aren't in an extremely bullish spot. You can't argue to say, well, there's too much risk, or that might not happen, or that's highly unlikely. No, you can't say any of that. The U.S. elections. My Seeking Alpha colleague had analyzed the U.S. elections generally affect gold prices. History shows that the link between gold prices and the elections is rather indirect. However, it seems that this time the situation is quite different. To start with, there's a risk that there may be no clear winner, so now we do know there might be a contested election, which is definitely coming. What is more, due to the massive voting by mail, there might be further delays, which also increase the overall level of uncertainty. GLD advantages. I'm gonna skip this part just because. Let's go right here though. So, however, the problem is that physical gold reserves are highly scarce. According to the World Gold Council, there are just 197,000 tons of above ground gold currently available. That's not much at all. If I were to put this all together, the resulting Q would be about 21 meters on each side. What's more is 47% of the gold is due to jewelry. It might seem that below ground gold reserves are quite high, but unfortunately they're not. Geologists estimate there's about 54,000 tons of them. So that's pretty interesting to think about. That's really interesting, and that's scary. Well, I mean, it's profitable for us, but it's scary to think about. I mean, how small of an amount that is. Certainly, there is more paper gold than physical gold. Some claim that the paper to physical gold ratio is around 250 to 1. That's enormous. As soon as demand for physical gold surges, there will not be enough to go around for everyone. So in my view, the option to convert paper into physical gold is highly useful. If the ETF is physically backed by gold bullions, then it looks like there's such a possibility. And that is exactly why I tell you, buy the physical metal. If you can't hold it, you don't own it. There's definitely more reasons than not. There's more pros than cons to owning physical compared to the paper. Too much enthusiasm about gold ETFs? I don't think so. Some experts think that there have already been too many positive net flows of capital into gold ETFs, including GLD. What is more, the fact that their price is stuck near $1,900 per ounce and $180 per share, respectively, at the time of writing, might suggest the rally is completely out of steam. So there's a gold bubble set to burst. I disagree, and I'm going to tell you why I disagree first before we go into his. People are waiting to find something. The Bitcoin boom put things in motion that investing can be profitable. Newer generations like Robinhood, using apps that are extremely accessible, extremely convenient, extremely easy to use, as well as seeing gold and silver being the second chance of Bitcoin most people lost, didn't get a chance in Bitcoin. Gold and silver will be next up. It already happened when silver started reaching towards 30 and gold broke above 2,000. A lot of new money coming in, especially since Biden won, with green energy, 5G, solar panels, electric vehicles, so many other things. Just like the guy that said, and this is the same with silver, the ETFs or the paper gold side does not equal to or amount to anywhere near the physical. So when that happens, what do you think is going to happen? Right? Weaker dollar, pushing prices up. So when people talk about the rally's over, it hasn't even started yet. Look back in 2008. It started from $9 silver, went up to $50 3 years later. Look at nowadays, March, $11. Do you think already like 7, 8, 9 months later the run's over? No, it's just getting started, especially once the stimulus gets thrown into the economy, and that kicks the dollar down, which pushes precious metals up with the demand, especially over the next 3-5 years from green energy and all this. There's too many things about to happen to say that it's settling down. If all of that already happened, and in 6-7 years from now they're saying it might settle down, yeah, that makes sense. But to say that things are about to settle down price-wise when so many things are about to be put into place, it just doesn't make sense to me. So he says I disagree. Let's hear why one can judge if there's an asset bubble according to the level of investors' enthusiasm, in my opinion. It looks to me that investors are quite indifferent to gold right now. In the business press, there's plenty of information on high-tech stocks, including like some Microsoft, Apple, Tesla. However, the yellow metal hasn't got too much media coverage. What is more, Robinhood traders don't seem to be highly interested in buying gold miner stocks. So in that respect, gold market doesn't look overheated right now, whereas fundamentals factors suggest a lot of upside potential. And that's kind of what I was saying. I'm glad he kind of brought the Robinhood in from a different perspective, though. Right? It hasn't happened yet. People need proof in the pudding. Right? People need proof in the pudding. Right now, people aren't buying gold or silver. You could tell them to, but they'll say, why? The price is $25, right? They need proof. And that's why I said the Bitcoin boom led to proof. And now, once gold broke past 2,000, like I just said, broke past the $2,000 level, when silver started to reach $30, that's when people pay attention. That's when people get on board. They're not going to buy it right now because they don't understand the point of investing is to buy early, to get in before the curve. When most people are buying, that's when you need to be selling. Most people are going to be buying $30, $40, $50, $60 silver we're going to be the ones selling it to them, right? We buy it at 20, 25, when most people say it's a bad idea because they don't understand that it hasn't appreciated yet. It's still undervalued. And that's the difference between a real investor and one of these fake investors. Fake investors, they just invest when it's the trend to do it. When everyone else is doing it, I'm going to buy some too. They don't understand that it's already exploded and you're buying it at the highest price it's ever going to be, and it's not going to go much higher. So you're actually buying it to the people that you should be. You're buying it off people that are selling it to you, that are really making the profits. You're at the short end of the stick. So here's the conclusion. Price guessing is quite an ungrateful task. However, E.B. Tucker, who correctly predicted gold would hit an all-time high this year, expects gold price to hit $2,500 by year end. If his prediction turns out to be true, I expect GLD to hit $236. So here is how I arrived at this result. $1,900 current price per ounce at the time of writing, $2,500 price target. 2,500 divided by $10.56 is 236. This forecast might not be entirely accurate. However, in spite of recent gold sell-off, I expect the yellow metal to shine. So whether you're in GLD, whether you're in the physical gold, things are definitely looking up. I cannot argue, and I hope I don't see how anyone could argue with me that precious metals are a risky investment or not profitable or don't have a lot of opportunity or don't have a lot of potential. Right, you can't argue that. It's just downright ignorant to say anything different, because everything, the stars are aligning. The perfect storm is here, and here we go. Right? Are you ready? Do you have enough in your portfolio, or do you still feel like you need to accumulate more? Let me know. A lot of times when these situations happen, people get in a little bit of a panic mode because they realize, wow, I thought I had 5-10 years left, and it's looking like I only might have a couple months or a year at most to accumulate more. And that's scary for a lot of people because we're trying to make life-changing investments, financial freedom, and you can't do that with just 100 ounces of silver, right? We're going to need a lot of silver and a lot of gold, getting it for cheap, to really make a dent into our lifestyle and to live financially free. So anyways, I don't want you to overspend, though. You still got to budget. You still got to pay your bills. You still got to feed your kids. You still got to pay your car. You still got to pay your rent, right? You can't just start spending 90% of your paycheck on precious metals just to catch up, because then you're going to put yourself in an even deeper hole and then have to resell your silver because you can't pay your rent. And then you lose money, right? So anyways, I hope you enjoyed this video. If you thought this video was educational, informational, or at least entertaining, make sure to smash the like button. I post daily videos every single day giving you the newest information on what's happening, what you should do, and why. Thanks for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.